everybody. Welcome to TraderMerlin Show. It is your Tuesday edition. I hope you had a great trading session out there today. And if you were long and strong, as these indexes have been telling you to do, you did all right today. We'll run over some of those numbers to start our show. Today's topic is going to be specifically focusing on a couple listener questions about how volume impacts trading. So I'll do most of the beginning of the show there, and then we'll get into whatever listener questions you guys have. Hello, Thomasina, Big Eb, Jorge, Leskin, Cape Canaveral man out there, Vernon, Tom, Jeff, Ivsy, Jerry, Chris, good to have you guys with us today. Now, a little bit of change. I told you yesterday that Matt Leising was going to be on the program today. I didn't happen today, but we confirmed him for tomorrow. So tomorrow, you guys, it will be a very interesting show. Matt is a Bloomberg reporter who kind of fell into the whole crypto world through the world of finance, and in particular, dealing with a $55 million theft of Ethereum. So we'll talk about some of the risks of cryptocurrencies. We'll share a little bit about that story and kind of what prompted that theft, and more importantly, the risk potential that there is in cryptocurrencies. And then maybe we'll talk about the future of it and see what Matt sees going forward in that space, because he's really kind of entrenched in kind of the crypto world and sees a lot of different projects. And I'm as envious as hell, because this guy had the opportunity to interview Vitalik Buterin many times. And as crazy and strange as he is, I would love to sit and talk with Vitalik someday. But, you know, when you go from a 19-year-old kid who doesn't have any money to a multi-billionaire in a couple of years, he's out of my league. All right, let's go to our first topic, which is how volume impacts trading. Actually, you know what? No, hold on. I don't want to do that. I'm going to go back to this one just because I thought it was noteworthy today. We'll talk about markets, and then we will get into volume trading, because it may tie into some of our trading today. All right, here is Bitcoin on the day, which had a down day. No big deal. Still at 18,865, down 1.59%. No big deal. That's not the story of the day. Crude oil also down just ever so slightly, but it's not the most exciting chart, even though you have a nice uptrend for the better part of a month. Still has a ways to go. I'm still targeting that $48 mark, which you guys see mapped out there. Actually, I think this has been changing. If I adjust this and go at CL equals 107x, and it might be 103x, and I forget what the commodities, the line should be a little bit different. So we actually have closed on the adjusted futures chart here. It's the unadjusted sometimes gets a little funky. Anyway, that was number 6. I'm going to skip the future or the 10-year and go straight to the S&P 500. Again, beautiful looking chart here. You guys saw in yesterday's show how Scott McCormick was rather bullish on the S&P 500. The $4,300 to $4,500 target was thrown out a few times. So all in all, this looks really good. Closing at an all-time high today. It did hit an all-time intraday high as well. So it's just continuing to storm to the upside, not just for the NASDAQ, or excuse me, the S&P, but also the NASDAQ. You notice we haven't had a red day. There has not been a red day in over 2 weeks. Pretty crazy, impressive there. Gold finally ripping back to those supply levels. Now, I kind of thought that maybe for the short sellers that this would be an area at 1875. We talked about it a couple weeks ago when this thing was really selling off. I said, well, where's the buy point? And the buy point was at 1750. Well, we almost got there, and now it looks like it's back up to an area of supply, and that supply area being right around that 1875 mark, which is kind of right where the cursor is. So you guys can see coming right back in, if you're looking at shorting a downtrend, which technically is what you should be doing on a chart like this. I know, strip out the fact that this is gold, guys, and just look at the price chart. This would actually be a technical spot to be going short on gold. We'll see how it pans out over the next couple days. Gold is obviously very volatile and has some pretty crazy swings, but pure technical analysis tells us shorting gold right now will probably be the way to go. But that's not the story. The story is Russell 2000, which is just becoming the place where everybody is pouring their money. It's had a couple of down days, but the percentage move we've seen in the past couple of weeks has just been ridiculous. You're looking at going from 1,500 in early November to 2,000. Almost 2,000, right? You're looking at almost a 20% gain in a month. It's ridiculous for these types of markets, and I'll give you those numbers here just so we can see exact percentage. I said almost because it's, I may be wrong, 26% gain in the Russell 2000 in 39 days. That is unbelievable. Normally 26%'s a great year, and here you're seeing 26% in 1 month. Ridiculous, and certainly don't want to be on the shorting side of this one, which I have been at multiple points on the Russell 2000. But that's your story of the top 6 or 7 markets, depending on how I focus on them today. But that's your number one out there. Okay, now we can get to the story at hand, which is a result of several listener questions. What I'm going to do is I'm going to go through three basic things here, and then I'll get into the specific listener questions so we can kind of use this mini lesson, if you will, as a launch point. And many of you who have been followers of Power Trading Radio over the years, I don't know why this is so crooked up here. I feel like I'm slanted at an angle here. My pictures are perfectly straight, I tell you. I thought it might be the camera, but it's not. Any of you who are viewers of Power Trading Radio over the years, and I think I may have even done something like this early on the TraderMerlin show, kind of explaining volume and how it impacts price action. And it's critical because I think there might be a misconception from people saying that I'm trading just using volume or using that to make trades. That's absolutely not the case. To me, volume serves three purposes, and I could probably add on a fourth, but three broad purposes. And those being, number one, it is a risk management tool, meaning a way for me to assess potential risk of any specific trade. And hello, Dana. Good to have you with us. 77 in San Diego, Randall. And by the way, I loved your comment you sent me the other day. I meant to get back to you on that one. That was pretty good. Risk management being number one. And when I say risk management, it's a couple things. You've heard me talk about the analogy I like to use of diving into a swimming pool. And when the markets are open and there's regular market hours, that pool is 20 feet deep, full of water. Of course, depending on what you're trading, if you trade the indexes and things like that, the major names, you have plenty of liquidity. Liquidity is the ability for that water to break your fall, meaning your market orders not going to move the market. Also, you're going to have tighter spreads in that when you have a lot of liquidity. But when markets close, when that bell rings, it's Fred Flintstone pulling that trigger and going yabba dabba doo, he's out of there. Volume dries up very quickly, and something that was very liquid and safe can become extremely dangerous. So I look at that both during regular market hours and after. And as far as security selection, if you're thinking of things to trade, you want to shy away from the things that are illiquid, that don't have a lot of volume. What, pray tell, is a lot of volume? It really depends on your particular trading style. So if you're trading 100 shares at a time, something trades 1 million shares a day on average, you're probably going to be okay. The only danger that's present there for you, if you're trading 100 shares at a time, is how wide does that spread get? You start getting down below 1 million shares and those spreads get wider and wider. And why is that important? Because for a lot of traders, they're using market orders. If a spread is wide, that market order, the spread there is essentially the money that you're giving the markets for an extra little fee for them to do their business and facilitate the other side of your trade. You look at something like Microsoft, it has a fairly tight spread because there's so much volume on it, millions and tens of millions of transactions a day on Microsoft. Whereas you look at something like, Integrated Silicon Solutions or some smaller cap companies, they might have a 10, 15 cent spread or even more than that. So the thinly traded ones, less than, let's say, 1 million, 1.5 million, going to have a much wider spread. So what should you do? Easy thing to do is just run a filter on your stocks and remove anything that's below a certain threshold that fits your style. If you're someone who's trading 1,000 share blocks at a time, you probably want to have a couple million average daily volume over the past 14, 15, 20 days, whatever it is. Don't just pick over yesterday because it could have been a one-off day. So that to me is step number one, is the risk management side of it, is saying how liquid is it? Because you certainly don't want to jump into a swimming pool with 1 inch of water in it. It could be detrimental to your financial well-being. Number two on this list is going to be move confirmation. I know that I've explained this before, and I'll draw some pictures up here in just a second. Basically, I want volume to be validating a move, the emotion, the euphoria that is represented on that stock price chart. And in that, we can see things like climax or capitulation, meaning that when everyone gets overzealous or overly panicked on something, it can actually be seen on a price chart. So let me real quickly show you some visualizations here, and then I'll get into some of the examples. If I look at price moving up, and I'm going to do these multiple examples here of price moving to the upside. You guys just flip everything the other way if you want, or just flip the price chart the other way if you want, and you're going to get the same result. But I just didn't think we would have time to do both the long and short example. So we'll just do for the long, which means when price is moving up. So on this chart here, you guys can see I've got price moving up, and I have volume at the bottom increasing and increasing and increasing. What this tells me is that as price is moving up, people are getting more and more interested in it, right? That's what you want to see. To me, that confirms the move because it's validating the up move, meaning more buyers are coming in. That should drive price to the upside. What happens quite frequently is you'll see a chart that looks like this, where it's the same up move. Notice the up move is exactly the same, but you have declining volume. You have to ask yourself, well, how the heck can that happen? How can you have two pictures of price look identical, yet one has increasing volume and one has a diminishing? What it is uncertainty. So when the market's moving up, like we saw in the first example on the left, and you have increasing volume, it tells you that the party's going on. People are coming to that party. Here it is. Let's go. Kegs over there. There's the pool. Here's the stripper pole. Let's go. Let's party, right? That's normal when you have something strong and in demand. And same thing if it's selling off, right? You have the panic start to increase and people are freaking out. Volume starts to increase there as well. But if we look at the right side, it's diminishing. So how do you have it move up? Essentially what you have is a situation where the people that are in it just aren't selling. And all this represents to me, I mean, we could dive into all the million reasons why, but what it represents to me is extreme uncertainty. You just don't know. You could say that in the right-hand example, that the the sellers just decided to hold their shares and not sell. But it also means that the buyers aren't buying either. So it's a slight imbalance between the buyers and sellers. So if I was to take out my pen, as I've done here in the past, let me see where I can get my drawing on. You guys all remember I've done this before. If you have 10 sellers and 10 buyers, right? Price is going to go sideways. No big deal. In this example down here, we could have a situation where instead of having 10 sellers and 10 buyers, I have 15 buyers and I have 10 sellers. Well, demand exceeds supply, price is moving up, and overall, I'm looking at a number, and I'm just making this up as an example, guys, is at 25, right? Well, what could be happening here is a situation where the selling pressure has dropped to, let's say, 6, and my buyers are at 8. So overall, that reflects to me a lack of interest, right? The total there is going to be 14. If I'm losing anybody, let me know. But the math here shows you that the equation, if we do simple math, the one on the right-hand side tells me there's a lack of interest. It's both a lack of interest on the sellers and buyers, but the buyers still outnumber the sellers, so it pushes it up. Why the right side is more scary to me is because what happens when all of a sudden those sellers who disappeared from the equation decide to come back in? I don't know when that's going to happen. It's too unpredictable. It could happen at any moment. On the left side of the screen, though, I know that at a certain point that buying will cease. You're going to see it start to peak, and I'll show you what that looks like on a price chart here going forward. Let me see the questions here real quick. So on the right side of the screen, would you sell? It's not necessarily that you sell, but I think you have to. You ever walk down like a nice busy street in Las Vegas, right? You're walking down the main strip in Vegas. What's it called? Oh my gosh, Las Vegas Boulevard, I think is what it's called. You're walking down there and no worries at all, right? Yeah, you worry about a pickpocket or the smut peddlers that are always sitting out there with their little, booklets going, hey, come on, trying to get you to buy a call, girl. That's Vegas. Whatever, they're harmless. But you walk down some shady side streets, you have to be on absolute alert from getting mugged or jumped. To me, this example is exactly that. On the left-hand side, hey, party as usual, things are moving up. I still need to be aware, but I know that people are driving price up because I can see it reflected in volume. On the right-hand side, you don't have that confirmation of price moving up with volume. So to me, what I would be doing on the right-hand side is I would be moving my stop losses up. I'd be much more strict about my stop losses and money management here because as soon as those sellers come in, they could really crush this thing to the downside. And that to me is a scary proposition. What we could probably do, notice I have both of these with green price charts. You could probably look at it like this, right? I just changed the volume to color-coded for the podcasters out there, and the green supporting the move. In this case, on the right-hand side, the red is not supporting that move. You got to, you kind of scratch your head and go, well, how can it move up if no one's interested? It's simply that equation that I showed earlier between the buyers and sellers. Now, the last part here would be if it looked something like this. So here we have the price chart. Everything is normal on the left-hand side of the screen. But what happens when you get a situation that looks like this? I'm hoping it'll start to draw here. Oh, dab nabbit. Well, there you go. I had it nice and slowly timed. Then all of a sudden, boom, you get this. All right, this leads to bullet point number 3 that I made, which was climax or capitulation. Climax is going to be when something just is ripping to the upside. The second an example would be something's ripping to the downside would be capitulation. So when I see something like this to me is one of those great opportunities where I just become much more excited about the situation, much more alert about the situation because I feel like now we're going to start to see a big move. We could have the exact same scenario. Charts could look identical, but what this tells me here on the left hand or right hand side of your screen, I'm highlighting this completely abnormal spike in volume, means that people got overzealous and drove it up. So when you have a situation where so many people come into an asset all at once, normally there's this moment, or it could be days or weeks, where there really is no new buyers coming in to drive it up any higher because they spiked at once. And that can lead to reversals in price, moves to the south side, and that's what I like to look for. If I'm in something and I get a climactic volume spike in the direction I'm in, again, I'm really tightening things up because it leads me to believe that this chart on the right-hand side is going to come ripping back down in a matter of probably the next day or within a couple days, you will see that thing drop back down. So I'll show you some examples here in a second. Medic says, Merlin, if I remember right, you mentioned that you can use volume or regular indexes, but not recommended for Forex because of different brokerages. Yes, true. So using volume on short term isn't recommended, right? Well, first off, yeah, you're correct. I would not be using volume on a non-centralized market. Spot Forex is not centralized, meaning the exchanges, there isn't a central location. You're dealing with a very fragmented market. And, we could look through the states here. I got the map behind me of the U.S. There's little mom and pop Forex shops all over the place, and they're going to have their own price book. To me, that makes it a little bit riskier. Of course, if you're a pretty active Forex trader, you want to be at the bigger guys. But if you get that order book from them, you're just getting their volume. So to me, that is not really... It's a bit dangerous in a non-centralized market. If you're looking at the futures market, it's centralized. If you're looking at equity markets, centralized. So options as well, centralized market. That makes it a lot easier to trade these types of things because you're getting the summation of volume. Also, for those of you who use TradeStations or different brokers, you might want to look and see what data you are getting. I know that for a long time, TradeStation would charge you for all the volume of all the exchanges. There was a fee for it, but you could get BATs for free. So a lot of people were just using BATs, which is a subset of the data. And you're getting a fragment of it again. All right, so Jeff says, how do you enter that short? Hold on, I'll get there. All right, so is everybody with me on the basics of how volume confirms move? I think that you guys could understand. Just flip this chart over. Price going down. If price is going down, you want volume to be increasing because that means that there's all of a sudden panic is coming in, right? People are getting fearful and they're starting to unload their shares. Oh God, it's taking, I'm getting out. That's what you would normally want to see when something is selling off like that. If something is selling off on extremely low volume, that's got to make you raise an eyebrow and go, wait a minute, what's going on here? It got really illiquid. And illiquid markets like that, again, pose risk, which is why I like to use volume to help reduce that risk exposure. So let me go through, I'm going to read two questions here. I'm going to try to answer them. It's kind of fragmented because they're really big questions, both from the same individual, but I thought I would read those two, and as I go through examples here and show you some stuff, hopefully I answer his questions along the way. So the first one, they're both from Josh. He says, I like to use a simple 10-period relative strength index, RSI, to give me an odds enhancer on my trades. I see you typically just use volume average. Okay. That's not really an odds enhancer for me personally. I'm just using it to see what the excitement is for that. I'll give you guys another real basic example of how volume can be looked at. I know some of you, and of course we're in COVID right now, so nobody's really going to big parties, but I want you to think back to your college days for those of you who went to college, right? I know you're trying to compartmentalize those memories. You're probably married with kids right now, and you're going to start blushing of all the things you did when you were in college. Drinking bottles of whiskey on the rooftop with a whole bunch of collegiate girls or guys. Awesome. Good memories, right? When you went to some, high school party or college party when you were younger, these off-the-chain parties, and you were told this is going to be the rager of the century for your school. And you get there, and there's like 5 people. And by the end of the night, there's 15 people total. Some guy busts out his guitar, you're singing Kumbaya, and you're like, man, this is great. I'm really excited about this. But maybe we can watch Animal House to get it more exciting. That's a lame party, right? It's not the best party. But you go to the party, you walk up to the party, and you've got people swinging from the rooftops. There's some guy in a Sea-Doo doing wheelies off the roof of the house. Just craziness going on. You're like, oh, this is going to be a night to remember. To me, it's kind of similar. Like, you don't want to go to a party and it's totally boring. So I don't want to get into a stock that has no volume, meaning there's no party. The party needs to be there. All right. I know my analogies suck. I apologize. Okay, so let me go through this again. Josh, I'm not using just volume as an odds enhancer. It's just a component to measure risk. He says, could you explain how you use this as an odds enhancer in real time? I understand it may spike after getting in, but the spike doesn't typically show you until it's too late, right? Correct. Remember, volume is a result of all the trades that happened. It's not a forecasting tool at all. But like I showed you with the climax or capitulation spike, when you all of a sudden see it, a huge abnormal spike that's 2, 3, 4 times normal volume, you got to go, uh-oh, it's going to change here quickly, right? Something's about to rip the other way because who's left to drive it up? Everyone just came in and bought a whole bunch of it. They're chasing it. It'll usually have a pullback, and that's an opportunity. The question is, when do you short it? As Jeff pointed out, typed in here, so when do you enter that short? That's the most challenging piece. A lot of the time, you have to kind of take a stab at it. The key here, for me anyway, is when you enter that short, if it's in an existing supply zone, right? So if that chart that I showed you had price spike up with a huge spike in volume and it's right in a supply zone, okay, I'm shorting it. And I do have an example for you guys today that actually happened recently, and I'll show you that one. So the second question, which we'll get to, is from Josh. He's saying, say I draw my nice daily zones, understand what the trend is and where it is likely to change at, but don't ever take the trades unless it's oversold or overbought according to my RSI. I feel like volume average, either 1 is too late or even give you an opportunity to get in, or 2, I have no clue how to properly use it to my advantage. Okay, so what you're trying to do here, Josh, which I think is a mistake, is you're using that as a confirmation signal, using volume average as a confirmation signal. Don't do that. You don't want to use volume as a confirmation saying, oh, well, now it's volume's high, I'm getting in. No, that's not the way to do it. I know, Tom. My analogies were terrible. I've been using the Blues Brothers method all. That's a great movie, by the way. Who have not seen Blues Brothers? It's funny. Most people have seen Blues Brothers or Animal House, but not Blues Brothers. I'm on a mission from God. Okay, so Josh, I like what you're doing here with the RSI. The challenge with RSI is it takes longer for it to get into an overbought or oversold situation. So you're hurting yourself sometimes by using RSI. Now, if you want to change a little bit, you could be using stochastics. Stochastics will typically get to those overbought or oversold situations faster than RSI. RSI will take some time to get to in that oversold situation. So if you want to speed that process up, a couple different things you could do. RSI is generally 14 periods. Now, I recommend keeping it at 14 periods because that's what everybody in the world is using. However, if you're looking for faster signals and want to get in, you could switch it down to a lower amount of data in that study, meaning instead of 14, maybe you go to 9 or something like that. Just a thought if you're looking to get faster signals. But then again, if you start tweaking these things, you're making it do what you want it to do, not what everyone else is going to react to. Most people will react to the overbought or oversold on the normal defaults, which is 14 period. Oh yes, 1941, that's another great one. Dan Aykroyd, right? World War II. Yeah, that's a great one. Funny movie. Okay, let's see. So let me go show you some examples here. I had some charts, kind of like there's 3 different things I want to look at today, and some of these charts that I found today really post some great examples for you of different pieces of volume. So the first one I want to do, and let me ask you a question. Is it possible to track? Is it possible that you could go to market? This is a good one. Is it possible that I'm talking the viewers out there today, can do a market order for 80,000 shares on something that's very thinly traded and not move it at all? Meaning not even a penny. Is it possible that could happen? Any guesses? I have to wait here because of the delay. I don't mess with the latency because I don't want to mess up any screen issues with you guys on your end. But the question is, if you were to send out 80,000 shares on a market order to buy or sell, doesn't matter, do you think that you could do that without moving the market? And if not, how could you do it without moving the market? The truth is there is a way to do it, and I'll show you this on the stock right now. This is a very interesting one I saw today from PSET. All right, you guys notice this stock trades. It's possible, but very, very, very unlikely, right? Very unlikely. So look at this chart here. You guys can tell right away you shouldn't be touching this thing, PSET, because it's so gappy. For those who might be new, gaps are just a difference between where it open and close, and it's all over the place. Weird. You should never trade something like this. You'll notice at the bottom, guys, it trades 4,000 shares average a day. That tells me that if I were to bring up the level 2, there's almost nobody there wanting to buy it. It is an extremely low liquid thing. This one is dangerous as hell to trade. So you hear about black market orders or institutional orders where they basically don't even go straight to the open market. You and I, when we buy and sell, we are always going to the open market. That's just the way it's going to happen. You go to the open market, you may actually get filled from an institution, but usually they're going to print it right away. Look at this chart. I think you guys can see where I was going with this. There's something very bizarre on the right-hand side. Notice this volume spike. Average volume was 4,000 transactions per day. 4,000 shares traded per day. It traded 86,000. You're talking a factor of 20 times normal volume. Don't you think that candle would be colossal? Just one of the biggest candles you've ever seen, right? You've got volume 20 times normal. I tell you what, you put 20 times normal volume on Microsoft, that thing's up 20-30% of the day. This thing was up 0.26% today. Just barely up. So how on earth does that happen? It was not you or me, a retail investor, hitting a market order. This is somebody who had probably 80,000 shares. My guess is probably 85,000, judging by the volume. Probably just called up another broker and was like, hey, Bob, hey, this is Merlin with Fidelity. Listen, hey, I want to buy 50,000 shares of PSET. Yeah, I know. I never heard of the company either, but I need to buy 85,000 for a client. You got some? Sure. What price do you want to sell it to me at? I'll take it for $46.40. Boom. So it transacts, but it doesn't go to the open market. It just simply will print on the screen, and it doesn't cause these big moves because it was negotiated beforehand, if that makes sense. This is the type of stuff that when you're reading price action or reading the ticker and time in sales can be important. For most people, it's not that relevant, but I think you guys can see very clearly this chart just doesn't make sense. Like, how could you possibly have a move that small with 20x normal volume? So anyway, that's me looking at volume. I was looking for stuff with climactic volume today, and this popped up on the radar, and I was like, what a joke. I wouldn't touch this with anybody's money. All right. There was a question from Jeff about when to trade these things, right? Well, let's go to I think it's SNDL. I should have typed these ones down. Sorry. SNDL. Yes. Okay. So you guys can see that this thing really had almost no volume. And look, I know it's a 50-cent stock. It just popped on the radar, and I want to show it to you just because it actually did well based off the rules that I would have for trading climactic volume. So you look at the bottom here, it doesn't look like climactic volume on the daily basis. It actually looks like it's dropping down. It trades on average 250 million shares a day, and you guys have probably never even heard of this company. Let me add on the ticker symbol here so you guys can see that one. It's SNDL, Sundial Growers. Somebody got high on Sundial. You notice that huge spike, though, here a couple days ago. Going back to November 30th, monstrous move up, right? A huge move up. And then what did it do? It gapped up. And it gapped up on really high volume, right? So I would already be alerted on the November 30th day to this almost 2 billion shares traded. And if you don't see it or it's not clear to you guys, just let me know, that because I want to make sure you understand this. This right here, this big green candle with 2 billion shares traded, that would have created a red flag for me. And it says, look, there's way more volume than normal. People are chasing this thing up. I'm looking to short it. It doesn't mean I'm shorting it that day, right? Chasing this thing, it could jump up the next day and sell off even more. But the next day, I'll go into the hive back here. I would say we have a supply zone, right, roughly there between 90 and 95 cents. And you can see it gapped right up into it. It ran a little bit high, but then came ripping back down. And it was to be expected that this thing was going to have a pullback simply because that massive climactic volume spike of 2 billion shares. And this is typical for capitulation and climactic volume type situations. What else do I have? I think American Airlines had a good one too. Here's AAL on the daily basis, and I think I wanted to bring up this guy here because you look back here in June, you have another couple really huge spikes. I'm gonna try to zoom in for you. Just go historically. I remember this one back in June. I was thinking of actually getting short airlines again when this thing ripped up because look at these volume spikes. At the time, it was trading an average of about 75 million shares a day, which is still a lot. right? Yeah, it traded an average of 75 million, but on this day it traded 400 million. Wow. I mean, this is, for whatever reason, who cares? There's the belief that this is going to be overdone. It had 2 consecutive days. The next day, it opens up and actually ended up closing this gap. I'm a big fan of watching these gaps fill, even though the candle the next day on AAL kind of filled that gap. To me, it still acts as a magnet towards price. Another opportunity here based off climactic volume, which is one of my favorite things to look for. Company sold shares. Are we talking about the SNDL one? Probably. I don't even know what they did, but one of the things I like about this is I don't really need to know. I'm just looking at what's going on. That's when you sold your AL. Nice. Good job, Tomasina. Well, I mean, you came into an area where you kind of thought it might sell off from, and it was after 2 months. I mean, those volume days are huge. It did more volume in 2 days than it does in 10 days now, right? If it's trading an average of 75 million shares a day, you add up those two, you're looking at close to 700 million. So crazy. 10 days of volume in 2 days. That is climactic volume. One other one, I think I had someone that was asking about volume intraday and does it work the same way? It does, but remember with intraday stuff, you don't get gaps. And I'm a big fan of using gaps. I like to see the gaps fill and the attraction they have. One that I saw today was on Chris. And this is another small cap stock, but again, this is something I wouldn't touch with a 10-foot pole. Notice the huge volume spike. It trades an average of 7 million shares a day, and today was 323 million. If you're curious, most of you probably never heard of that company. Yes, I do have a scan for volume. I just use the really crappy one that's in TradeStation, and I can show you that one if you guys like. All right, so this was actually on the 5-minute time frame, and I just wanted to show kind of some intraday pieces. It really didn't do much. It was bouncing between $6 and $7 pretty much all day. But if you look down here at the bottom, you see 2 pretty significant spikes above the average. You guys see those down at the bottom? There's one right here. Let's see if I can maybe draw some arrows on here. There's one right there at the bottom, and there's another one over here where it was clearly well above normal volume, and it was during the trading day. Normally, you don't see those big spikes. And if you just mouse over those, notice right where the spikes happen. It happened on this big shooting star, which you could trade this candle formation intraday as a shooting star. Also had climactic volume. Great. You see back here as well. Right at this candle, it was the very peak of this green candle, had the highest spike of volume, and then started to drift down again. So these can be used intraday. I find it much better and more powerful when I'm looking at the daily time frames for these ones. And the real key for me with trading these as an odds enhancer is it's still got to go back to supply and demand. You still want to line the areas up with something historically where it's shown me that the buyers or sellers have pushed it either up or down, right? That to me is the key with volume. So let's see, I got a whole bunch of questions coming in here. What's my thoughts on MMEX? MMEX. I got to show you this 5-minute chart here, guys. Here's a it's a 5-minute chart. I think it looks like crap. I wouldn't touch it. Let's go D. Sorry, Larry. Is this the one that you want me to look at? I have a hard time believing that this is the one you want me to check out. This is the daily of it? It can't be. MMEX. But my thoughts on it? This thing's dead. This is dead. No defibrillator is going to save this thing. MMEX resources. Is that what you want to learn? Is this the one? I mean, look. If you're thinking about buying this, what do you got to lose, right? It's going to go to zero because it's already at zero. It's 1/10 of a penny. I'm sorry, 1/100th of a penny. Yeah, I wouldn't. I mean, if you got a few grand, fine, and you know that money is lost, then throw it in here. My guess is this company will probably do something like a 10,000 to 1 split. But if you look at it and I apologize for sounding so bitter or condescending, but I mean, come on, guys, look at this chart. This thing sucks. It's done nothing. Now, could it rise from the ashes and all of a sudden get back up to $5? Yeah, sure, it could. Yeah, anything is possible. But right now, I've looked at this thing going back the last 2 years, and it's done literally nothing. From October of 2019, it has been more of a flat line. Yeah, it's more of a flat line than Ginsburg right now. I mean, it's not even a penny, Big Eb. It's at 0.0001. Yeah, that's point. There you go. So yeah, if you have money and you say, look, I'm going to put $1,000 into this thing, right? I mean, $1,000 you're going to buy yourself so many ridiculous shares, so many amount of shares. It's crazy. But you have to You have to chalk that up, Larry, as I'm literally taking this money. I'm going to tell myself I will never see this money again. I'm literally throwing it out the window as a pipe dream and saying, you know what? It's like putting money in Bitcoin back in 2009. I may never see this money again. And it may pay off. I mean, shoot, you buy $1,000 worth. Man, my math skills. I know this should be very easy for me, guys. Let me just do point. Oh, well, I can't even do the math in my head. So I was going to try to type it all out for you, but you buy 1,000 shares of that at 1/1000th of a penny, you're going to get a ton of shares. But yeah, do it and just keep that as a pipe dream. Okay, got 170. Great. I mean, so you got a good amount of money in there, $1,700. I hope it works out for you. But yeah, as far as buying that now, look, this is not something that you're going to be trading and saying, hey, I'm generating some income off it. It's a pipe dream. You hope that you're going to get lucky, and I hope you do too, Larry. Hope it works out for you. I have something funny to look at. PACD. Okay, let's check it out, Koja. PACD. Similar picture. Pacific Drilling's getting drilled right now. But thanks, folks. I'm here all week. Ugly chart. This is, again, one of those ones, if you ask me what to do, I'd say just stay away from it. These types of penny stocks, and you guys know that I have talked about penny stocks for so many times on this program about you want to stay away from them. They're nothing but gambling. This PACD, that MMEX, those are gamble trades. And while every now and again they do pay off, I don't know how many you're going to have to make before you finally hit that needle in the haystack and make a big, big killing off it. But both of these, I wouldn't put money in it unless I literally was thinking of throwing that money away. That's just my thoughts on those. Sorry, guys. Oh, it's suspend. Oh, okay. I see what you're talking about. Got it. Okay. I didn't even see that. I wouldn't have noticed if you hadn't just mentioned that one. Let's look at this on a daily time frame. You guys, if you notice here, they've done no trading for the month of November, and here we are on December 8th today. So they've been suspended. What does this mean for you? It means you're stuck. You're screwed. I mean, there's really nothing that you can do here. If you had money in this, they're literally just sitting there waiting for them to unfreeze it or tell you what legal resolution they might have if there's something going on against Pacific Drilling. But yeah, if you had money in it right now, you can't buy it or sell it. You're stuck. So that to me is one of the worst things. I'm okay taking a losing trade because I know I can get out. Something like this, you're just stuck and you can't do anything with it. Oh yeah, Larry. Futures are probably some of my favorite. What else? Immunes. I am Moons. I hope I pronounced that correctly. You got a pretty interesting name there, my friend. And algebra is one of my favorite subjects, by the way. Or is that F algebra because you didn't like it? It says, I think they're lotto tickets. That they are. They are. Absolutely. They're just a lotto ticket. And I'm not going to say you should never do that. I think you absolutely should take those types of chances. But what I'd hate to see is let's say someone's got, $10,000 and they go out and they buy $10,000 worth of these shares. To me, that's wrong. You should never be doing that. But you got $10,000, maybe take a few $100s worth and buy some of these things. But try to put that other capital, let's say you earmark $1,000 for totally speculative trades and $9,000 for safe stuff that you can generate income and grow that money. Because the whole goal is to grow your wealth. Whether you're getting, 1% a year or 50% a year, you still want to grow it. When you go for these penny stocks, you're looking for the multi-1,000% rates of return. And trust me, there were plenty of stocks today that were just ripping the upside penny stocks, but I'm not in them because I don't trade penny stocks. All right. LAZR. Did I talk about laser? Oh, no, I didn't talk about Luminar. And again, I think this is one that's come up a few times recently, Lisa. It's one of those ones that I will not touch this one. I'm looking for something that is somewhat predictable, and I know predictable is a dangerous word to be used, but I want something that has moves that are smooth, identifiable, that have a repeatable pattern, and show some sort of characteristic that I can capitalize on. This LAZR, which is Luminar Tech, if you go back to November's price, it was $10 a share, and then the next day it was still 10, then it jumps up to $12, and now it's at 41. I'm just not touching it. Too risky for me. Way too risky. As quickly as this thing went from $10 up to 46 or 47, it could come crashing back down, and you got a lot of open gaps here. There's a big gap right here between I'll do from the tails from 27 all the way down to 25 that may fill. I wouldn't touch this one. $18 on IPO last week. Oh, great. Started. How old is this thing? Oh yeah, so this was something else before then. If that's the case, Big Eb, if that's the case, that is just ridiculous. Yeah, no, I don't mess with stuff like that. I just stay away from it. Kodak. Oh yeah, stay away from that one too. That Kodak getting that vaccine money, right? Here's Eastman Kodak, big gap up today, but look at the volatility of this thing, right? I'm not touching it. Now you do have volume requirements are fine for me. I'd rather trade something that, again, doesn't have this sort of movement. I mean, this thing, obviously, when we were talking about it back in July of July of this year, when they said they're going to get the money for vaccine, well, it's trading at $2, and then all of a sudden this thing runs up to a high of over 60. That's just crazy. I don't need that to be long-term successful in the financial markets. Oh, no, the guy I'm talking about, the guy I'm talking about is Vitalik Buterin. Vitalik Buterin's the one I was talking about, the guy who created Ethereum, which will be the focal point for tomorrow's show. I'm really excited about that one. Matt Leising's going to have some great commentary for us, so looking forward to that one. Aiden sent in this next question. So let me, I know I've been answering a bunch of direct questions, but I want to make sure Aiden gets his question filled because it's an important one that's going to be happening this week. You have Airbnb and I think, was it Grubhub? One of Grubhubs or something like that are doing an IPO this week. And he says, this week Airbnb will be launching the IPO. I want to grab some shares, but I never bought any IPOs. What is the process? Are they going to activate the symbol in the opening of that day's market, or does there need to be some pre-order registration? It depends on the type of IPO, and what they're doing is they're going to do an auction-style IPO. My feeling on IPOs is they are nothing more than a industry-manipulated Ponzi scheme. I would stay away from it. And I know that you want to buy some Airbnb, and that's fine. You can do that. But here's how the process for an IPO works in general, and then I'll tell you about the specifics of Airbnbs. In general, I know you guys have heard me say this one before. DoorDash, Tom, that's the one. I'm sorry. They're doing an IPO this week as well. An IPO is generally a company a broker will be approached by somebody like DoorDash or Airbnb in this example. And they say, look, we want to take our company public. So they hire an underwriter, Goldman Sachs or some major firm like that. Goldman Sachs will then basically buy all the shares at a specified price with that company and then do everything they can to publicize this company, make it the greatest thing on earth. They'll go on CNBC, Fox, they'll drum up hype. They will probably pay the announcers on these different programs to talk about Airbnb and how it's going to be such a big IPO. Then they will go around and do a roadshow to the various big brokerage firms and pump up more enthusiasm. So let's say that their price all in that they paid was $8 per share. All they have to do is make it above 8, but if they can drum up enough excitement and get it out and sell their shares for 12, 15, 20, 80, 100, that would be great for them. So here's the way it will work. If the excitement and enthusiasm is high enough, they don't need to go out and partner up with other banks and brokers to offset their risk. So let's say I'm Goldman Sachs and I bought 100 million shares of this company and I paid $8 a share. That's $800 million I'm on the hook for. If I can see through the media, through CNBC, Fox, Bloomberg, all these different stations and publications that I am paying to get this thing pumped, that there's incredible demand. They're already hyping it up as the biggest IPO of 2020. Even though it's been COVID, it's going to be huge. Should I do it in a presidential voice? It's going to be huge. What will happen is I'm no longer going to need to go to my JP Morgan buddies or my Wells Fargo buddies or my Bank of America buddies who I would normally go to if I was nervous about the risk and offload, here's $10 million for you, Wells Fargo, and you can have it at 9, right? So I'm only making myself $10 million off that share. And I start piecing off little parts. If they're not interested and excitement isn't peak level, I might start to discount the price I'm going to sell them. And I may actually start calling my big clients inside my bank and saying, I want to unload some of the stuff. So I'll be like, hello, Mr. Rothfeld. Yeah, this is Bob with Goldman. Hey, I noticed you got $50 million in your account. We have access to an IPO that we think you should get. They'll do it to their high net worth clients first. If for some strange reason our phones ring, right? We are retail traders. I mean, I doubt anybody here is trading with over $50 million. If your phone rings and you've got yourself a $50,000 account and your broker saying, well, hello, Larry, this is Merlin with XYZ Investments. Hey, listen, man, we got this Airbnb IPO. I know you've heard about it. It's pretty hot. We want to sell you some. That means that that firm is so not confident with the IPO that they don't think that they could sell it out after the market opens at a higher price. So if they're calling you, you're the last one holding the bag. Remember that. Watch Wolf of Wall Street if you don't understand how that stuff works. There's a sucker born every minute, and usually it's the retail investor. Now, back to Airbnb. Aiden, if you want some of these shares, you'd have to contact your broker and tell them ahead of time that you want some of the IPO because it's an auction style. So the way it works is whoever's going to pay the most for this is going to get those shares. And it doesn't mean you, it means your broker. So my guess is it's going to be overinflated. It's going to be an overpriced IPO. It will probably spike the first day. They always do. But give it a few weeks and let the dust settle. What you'll see is normally after 30 or 90 days, depending on what the lockup period is, the insiders who bought it cannot sell their shares for a certain amount of time. Now put yourself in their shoes. Let's say you work for Airbnb, right? Or you're an executive and you know you're going public and you've got, I don't know, 100,000 shares of this stock that is basically free for you right now. But you can't sell it for 30 days. Maybe it's 90 days. It's usually 90 days, I believe, is the time limit. If it goes 90 days, what are you going to do if you own those shares of Airbnb? 90 days in, you can now sell it. At whatever price it is, you can finally sell one share or more. What are you going to do? Hell yeah, you're selling shares. I've got free money. I got 100,000 of them. It's not going to be trading at 50 bucks. I'm a millionaire. I'm out. So what happens is after that period ends, is usually there's a good amount of selling from the insiders. That's when you want to buy. When all those people are going to start to capitalize on it, price will drop. And to me, that's when you wait for it. As excited as you might be for Airbnb, that's what I would do. Yeah, big up. I did see that. They said they originally priced it between 45 and 50, and now they're already raising it to 60. Does that ring any bells with you to what I just said, guys? They already said 45 to 50 is what they think it's worth. They've gone through the fundamentals, and that's their inflated price. They probably paid 20 bucks a share for this thing, and now they're saying 45 to 50 so they can make a nice profit. But because they've done a masterful job of making everybody in the world think that Airbnb is going to be the next Amazon.com, well, all of a sudden now, you know what? We're going to raise it to $60. And who knows, if they can get demand even higher, it could open at 70, 80, or even more. So, Aiden, I know you might want this one. You're not going to get it at that $45 strike price. You're not going to get it. There's no way. No institution will be able to get it now because the hype has been drummed up. So I would wait would be my thing. Many years ago, Research in Motion was like a penny. Yeah, it was. There's a lot of them that rise from the ashes, Sue. But remember, there's a lot of them that just disappear into obscurity forever. And you might be holding on to that one a long time. Let's see. What else do we have here? Hope you take the cash to rent Cabo. No, if you guys, again, if we're talking about Vitalik, the billionaire, just weird kid, watch some of his interviews on YouTube tomorrow or before tomorrow's show. You'll see this guy is just, he's out there. He's just a brainiac, and he's just in his early 20s. It's crazy. The guy created $1 billion, I would say, globally changing technology at 19 years old. Okay, holy cow, look at the clock. Holy cow, where did time go? That said, let me look at the economic calendar for tomorrow. There really isn't anything on the earnings front that's noteworthy. I think you have Campbell's Soup reporting tomorrow. Excited about that one. Here's what we've got cooking for tomorrow. There's two breakdowns here of economic data for tomorrow that I think are noteworthy. And it starts up at the top there with, let me turn off the pen. It starts off with the Bank of Canada. Now, that's going to happen at 7 a.m. Pacific time. I said this is Pacific? Yes. I said it. Yeah, this is set for 7 a.m. Pacific time. So the equity markets will be 30 minutes open by then. But if you're trading the Canadian dollar, be careful with that one. It has been a certain mover, especially because the U.S. dollar has just been tanking. The CAD has been taking off to the upside. They have an interest in keeping their currency weak. We all have an interest in keeping our currency weak because our exports go up significantly. Right now, expectations are you're going to see the Canadian dollar stay at 25 basis points tomorrow. You can see that there at the top. No real change expected. It's really what the BOC rate statement is. What are they saying about their markets going forward and what may change? For the U.S., you have JOLTS job openings, final wholesale inventories, crude oil inventories, as well as the 10-year bond auction, which, again, they're selling more and more and more by those 10 years. That yield will probably rise even more. On the bottom, we looked at the British pound the other day with David Warner. That was a great show. David Warner, certainly one of the a big supporter of the British pound. Well, they have a lot of major economic news happening tomorrow. It looks like their GDP number is going to drop significantly from 1.1% month over month to 0.4%. So that's pretty ugly. They also have goods trade balance, industrial production, manufacturing sales, and construction output. So a lot of big announcements there for the British pound. So if you're looking at those ones, I'll just bring up the CAD and the British pound so you guys can see it. Here's the Canadian dollar. You can see that the Canadian dollar has been going almost straight up, and that's the Canadian dollar is the inverse here. So this is the U.S. dollar falling. That means the Canadian dollar has been rising. Fortunately for the U.S. dollar, it's a 2-day little bounce here, but judging by what we've been seeing with that dollar index, it looks like it's going to continue on down. The British pound, GBP USD. Okay, you've had a couple days of weakness with that British pound, which is not bad, but look where it's come from. It's been a pretty amazing couple of months with regards to percentage move for their currency. And again, they have an interest in things getting a little bit weaker. With a lot of economic data coming out this week, that may have some impact, or tomorrow may have some big impacts on the British pound. Tom says, I heard Campbell's soup cures COVID or colds or something like that. Yeah. Great. Now Campbell Soup's going to jump 150% tomorrow. Thanks for a lot, Tom. Hey, Tom, before you make announcements like that, I really appreciate it if you could tell me so I could buy some shares and front run your news. Yes. And Richard says, but we have no inflation. Boy, isn't that's the Wizard of Oz right there. Someone needs to pull back the curtain on the agencies that are reporting the inflation numbers and go, it was all a joke. There's serious inflation right now. Anyway, Miles, my friend, thank you so much for the donation. I do appreciate that. It goes to my whiskey collection. It was going to go to the whiteboard over here, but I just haven't taken the time to buy. Whiteboards are expensive, so I haven't bought a whiteboard for you guys. I did buy a nice camera, which I've never used, but maybe one of these days. But Miles, thank you so much. I do appreciate that. Thank you, Dana. I appreciate that as well. Guys, I wanted to bring the picture of the book up here. Let me see real quick if I can do this. Just so you guys can get ready for Matt tomorrow. There we go. It's called Out of the Ether. It's probably the longest book title that you're ever going to see. I was like, man, you could have made a shorter title there, buddy. It is called Out of the Ether, the amazing story of Ethereum and the $55 million heist that almost destroyed it all. It's a great read. I will admit I am a horrifically slow reader. It's not like I can't read. I just don't enjoy reading. Reading bores the hell. I'm a doer. Get me my hands dirty, and I like to just build and make and do stuff. That's great. Although that said, I've been reading this book. The way he writes, you can tell he has been in the writing world as a reporter for a long time. It's a great read. I would highly recommend you guys get it, especially if you are interested in the crypto space. It'll shed some light into a lot of the interesting crypto characters. There's a lot of really important people that I didn't even know about that he addresses right from the beginning of this book. So looking forward to do that with Matt tomorrow. If you guys have some cryptocurrency questions, send them on in. I'll get them all staged. And if you have any during the live show, of course, participate then. All right. Sorry to disappoint you, Big Eb. It's a 53-minute show today. That's going to do it for me, everybody. Hope you have a fantastic evening. I will see you tomorrow with Matt Leising talking about Ethereum and cryptocurrencies. Take care.